Hello, hello, hello. Happy Unemployment Thursday. How's everyone doing today? Good morning, Sterling. Thank you for putting in the news and other topics. What's Bostic saying? Have seen markets slowing in the labor market. Some slowing in the labor markets. It's now more balanced. Well, I mean, the jobless claims are down, and that's not really slowing. But we'll see. We'll see. We'll see. We'll see. We'll see. Oh boy, I'm trying to get to the comments. Where is everybody? Look at Sterling with all this stuff. I gotta keep scrolling and scrolling. Thank you, Sterling, for putting it all in, though. Good morning, Patrick. Good morning, Royal Palms. Oh, they're going to raise prices on drugs again. Fantastic. The popular ones, I bet, too, right? Good morning, Tony. Good morning, Legion Reaver. Hello, hello. Can I get an invite to the Discord? Send me a message through support. Eric, please. Thank you. Hit that like. Support of Pat Trading Partners. What else do we have? Good morning, Anissa. Thank you, as always, for tuning in. All right, we'll wait for some other people to come in. If you didn't get it from the title of the video, jobless claims coming in better. Initial jobless claims coming in at 187. Continuing jobless claims dropping back towards 1800. So, and that's in the K's. Hey, Christoph. So that's coming in much better than expected. We had Philly Fed business conditions dropping from prior. The new orders down substantially. Employment index coming back, but still negative. Prices paid dropping on that. Other than that, really quiet day now. Crude numbers because of the holiday on Monday. We got some bill auctions. We got Bostic speaking again. Bostic's really speaking a lot today. So I don't know if he'll comment on the same stuff he's already commented on at the 6:30, which was Sterling was putting in there. But that's where we sit. And then tomorrow we have consumer sentiment and inflation, the preliminary numbers for January. So let's see. Today it's been tech and mega cap buying. You see Google, Amazon, Tesla, Apple, Microsoft, Nvidia, all the chips on a tear right now. Software also going up. The only stuff is healthcare getting hit today. Rotation out of healthcare, but definitely into tech. And you see that tech, consumer cyclical are leading. Healthcare is lagging. So Fed Watch still has cut pause, but a six total cuts still priced in this year. The March is back down to 53%. And I don't know who's expecting half a point cut in March. That's absolutely insane, unless something out of the blue were to happen. But it's almost really because that's off the screen. How does that not? We're getting closer to where it's going to be 50-50, which means it'll probably be a pause, not a cut, and then the cut rolls out to May. But market's still expecting 6, still in greed mode, never even got to neutral mode. Let's get to more important stuff. Earnings was a lot of regional banks this morning. After the close, not much. Again, more regional banks. Tomorrow, Fifth Third Bank, another regional one. Alley, Travelers, there's just nothing big. The bigger earnings start next week, and then for the next 3 weeks, we'll be in major earnings season. So keep that in mind. Good morning, Jacob. So we yesterday coming down. Let me zoom in here. Coming down, just dipping below that key area I was watching, dipping below it briefly, and then rallying back. No close below the 62.5. And remember, between the 50 and the 62.5 is where we watch for key reversals. We got a pretty decent reversal. That's we've already come through and bounced a little today, holding the rotation zone also. Holding the rotation zone. Now, we start breaking below today's lows already. That will not be good We still have cycles down on the daily and weekly, but then I'd be watching for a retest of yesterday's lows, and that will be very key. And the 62.5 would still be at the on the closing basis, 47.53. Now on the positive side, with the rally this morning, this would be a percent B buy for the market bulls if it closes above yesterday's high. NASDAQ's in a stronger position, though. So if you forced me to choose between the S&P and NASDAQ, I'd be looking at the NASDAQ first. But the S&P technically, which did not even get up to those highs already, got close and then backed off. Got close and backed off once those unemployment numbers came out stronger. You can see here was the reversal at 7:30 Central. Now it's climbing back up there. So I'm going to watch how it reacts, especially at about 47.92. Then if it gets through that, the earlier highs set up at the reversal. But then pay attention to yesterday's highs on a closing basis, which would also be a close back below 4,875. So it would be close above 4,800 probably, unless it closes within that 75 or the 3 tick range. But that would also be from a rotation coming back up. So, and a percent B buy. And then could it turn it into a triple top? We'll see. Remember, cycle's still heading down and not at the bottom on the daily, weekly. So if this just pauses and is an inside day to yesterday, that is not necessarily a bullish setup then. But if it does go inside day today, then really yesterday's low and highs are still going to be remaining key. But it would not be, unless you're trading with the multi-day percent B buy, you would not be, for me, a percent B buy. Now, the NASDAQ, especially with all the strong into tech. Now, you see there's a lot of selling pressure up around this 1740, 1750 area. Selling on last Thursday, last Friday, Tuesday. Yesterday was a dip down straight to that 50% harmonic, the 16,695 area, which we did talk about yesterday. Now, today, you see it's still trading above yesterday's high. Yesterday's high being 16,982. So on any pullback, that is very key. Why? Because if it closes above here, it's a percent B buy. Now, going into the open, I'm going to watch how it reacts to some of these harmonics coming up here, some of these shorter term harmonics. But if it gets above 17,027.75 and then were to take out this low established after the unemployment numbers, that would be then for a key rollover play. Other than that, I'm watching for those yesterday's highs to hold. So that's the exact way I am looking at it this morning. We take out this 1750 area, especially with some momentum. You're looking about 17,150, 130 to 150. And then the highs back from December 28th, 17,165.25. And then we still have the reverse harmonics from the low back on Friday, Jan 5th, which would give me 17,269 and 17,373. So those are all the levels to the upside. I can't stress enough to keep watching yesterday's high. If we do set up that little potential double, and this is not as strong a pattern because it came up, but you know, if it did then take this out, it would be moving back down into a clear path move. I'm just curious with the this is not valid yet. I'm just looking back on the daily where that would take us. Because that trigger point is roughly at yesterday's high. So really keep an eye on that. What else? Christoph likes the daily double top on CENX quite a bit. Aluminum company making no money. We'll maybe take a look. I wish I kept my NASDAQ long. Well, you don't know how this is going to end up. You got to trade your strategy too. Okay? You got to know what your time frame and strategy are. As I said before, on the S&P, especially S&P and Nasdaq, the way I can get more bearish is if we close below the Friday the 5th lows on the S&P or the Friday the 5th lows on the Nasdaq. Other than that, from a short-term trailing, there's a great stop area now based off yesterday's lows from anything short-term. Again, all this is from my perspective, not trading advice. Yesterday, the Dow closing at that key support level, just below it this morning. But let's see how it holds up. We have a little mini potential double into the open, which, I mean, that's just, again, a short-term play, but that's something to watch, which could, retesting. Yesterday, we dipped down, and then the buying pressure at the end of the day kept us in that range. Now, it is below the rotation zone now, so it's a neutral mode, and I'm still watching to see how the close below 37,450. But keeping an eye on that mini double. So that's where we sit there. If we do start breaking down, my next major target is 36,700 on the Dow. The Russell holding above the 50 on a closing basis, dipping below it yesterday, holding above the 50. Cycles have gotten to the bottom on the daily, coming out of some potentially oversold conditions. This would be a super aggressive percent B buy. Why? It might just pop into resistance before another rollover play. So keep that into account. But yesterday's high in the Russell, I will be watching also. 1942.1. You see here, we tested it already from the day session earlier this morning with the unemployment numbers. So I'll be keeping an eye on that. Hey, Richard, thanks for tuning in. So VIX, with VIX options expiration yesterday, little reversal. I'm going to see now how we're breaking down 1428. Again, 1425 is going to be key. This morning we start breaking down there. My next key level is about 1375 I'll be watching. But we start breaking down below 1425. I'll be keeping an eye on the bullish case going in through the morning because this is a key area to see if it dips back into the huge consolidation pattern. DAX, little bounce today. Even on the DAX, that would be an aggressive percent B buy because it's also right at key resistance now. So keeping an eye to see where the DAX closes in relation to yesterday's high, 16,658. But I'll be watching for more rollover plays in the DAX, even if we get a bounce. Notes. Retesting the lows from Friday the 5th. Friday the 5th against the 200. Better setups, again, still are in the yield, though. The yield, we do have a lopsided potential double top. So that would be on a 4-hour closing basis below 4.073. Other than that, got to stick with the short-term bullish case unless that pulls back. And that could be a pullback to test the 4 area, 4.01. Okay, that's really the only thing with the yields. The yields are setting up slightly better. If you wonder if there's a setup in the notes, there's this one. This should still be valid. Yep. So there is still a setup in the notes if you're watching to trade the notes, which could take it back to 112.01. 10 years, we just did with the 10-2s after the big reversal yesterday. Back to minus 17 basis points where we're sitting right now. So the minus 8 has held. So nothing that I'm really focused on today with that. Dollar index, we do have a mini. I got to stay with the bullish case unless we get a close on a 4-hour basis below 102.79. and then it would be a pullback to the prior key breakout area. You see here, pullback into the rotation zone and a prior key breakout area. Other than that, spiking above the 200 yesterday and closing below it. So it's trying to chip away at this, but as long as it doesn't close below that lows, watching for continued upward pressure. The next key target's 103.60. Crude. We had that little, talked about that into the open yesterday, the little mini double, and then the continuation just continued on. Still in consolidation. Unless there's micro patterns like that, I'm not really interested in looking at anything more substantial in crude. The key resistance I'm looking at right now is about 73.80. But there's been lots of selling pressure in here, so I'll be watching for any potential reversal patterns up there. Natty gas, back and forth, has not hit the first target on the double yet. So nothing new there. Gold, nothing to talk about here. Still not a full gap fill. Still going to be watching for the gap fill back to Wednesday, December 13th. Taking that out of play. What else do we have? Yen finished the double and closed above the 62.5 on the daily. So even with a pullback, going to be watching for continued upwards pressure in the yen. 148.80 is about the next key target, then 150.18. Pullback area, major support coming in at 146.50. Euro, yen. There are some, it's better formed in the dollar index, but you can keep an eye on that. That would just be a bounce play in the euro, potentially on a 4-hour close above 109.06. Spiders closing above the 62.5. Key targets, gap up today, 473.94. So on any rollover play, it would be to yesterday's close, 472.29 to about 472.52. The 474, where it's trading now, is the key 37.5 harmonic. If it keeps rallying up, watch for a gap fill to sorry about that, little brain fart, 474.93. Then very key resistance above that, about 475.50. So that's what I'm watching there. In the NASDAQ, any rollover play, look at 409.26, then roughly about 408.25, and then it would be to 407.21 are all the downside targets there. To the upside, keeping an eye, we're trading 410.50, 411.40 is very key, then 412.92 are the key levels right there. What else? Tesla, we could be getting a little bounce here also. This is technically, even with this gap, watch for the gap fill to 219.98. And then this could turn into, it's harder to see now with the lopsided because of this wide bar here. So it's a lower probability one. But I'll be watching the 223.49 on a 4-hour basis. And that could be a little bounce play to take it back to the low 230s. Only at that point. What else do we have? NVIDIA and the chips just keep marching on. At this point, it's really just yesterday's low coming in at 547.40. Other than that, the next major target is 600 to 601.29. What else do we have? What else have I missed? Can we analyze the monthly spiders? Let's wait till tomorrow. Ask me tomorrow for the monthly spiders, okay, George? It's not going to change anything. Fast gapping up on a beat. There's your fast now. So that'll be interesting. This is, how'd those get knocked off? If you're looking for the next key targets, if this breaks out above the recent highs, The next key targets, 67.14 and then 68.62. So pullback rotation zone, and now gapping up to 66 this morning. What else have I? What else am I? All chips are going up. Everything's been buying the chips lately. It's buy the chips. What else do we have? Thank you, bro. Where else? I'm just going back through. What else did I miss? I know we had something else. I don't know. I can't find it at this point. Thanks for all the comments. Where do we sit? All right. PDD confirmed daily double top yesterday in the gap down, but did not trigger. Confirmed daily double. Let me get to the daily. Where's the? Did I type that in right? PDD daily double top. What am I missing? Because I'm not seeing. I mean it. Well, because that's. I don't even see one on the weekly. But if that was a double and it confirmed it, it would not have triggered with that. But I'm not seeing the double. I'm not seeing the double. This is just a disaster. Would you NVIDIA, it would need a pretty decent setup at this point to deal with a short play. Now, if we get one, because earnings aren't till, have they officially scheduled yet, or is this, I don't know if this is officially scheduled yet. Somebody will have to let me know. I have not looked at it, but closer to earnings, if there's a valid setup, I might look for something, but I would not touch this from a short perspective unless it triggered a very strong topping pattern. Okay, Coco, guaranteed. Guaranteed. What do we get with that guarantee? 20K guaranteed by Coco. That's what we have. Where you've been the last few days, Coco? Only coming in to guarantee 20K? All right, with that into the open, let's just take a look. Sorry if I missed something. That's not... Oh, didn't get above the 62.5. But going into the open, I'll just watch this 47.80, this low, 47.8250. And the NASDAQ... Looks like it didn't get high enough. Yeah, I'll still watch that key low. It just wouldn't use double targets. I'd be watching for the clear path breakout level, which is about 16,925. All right, let's just take a glance at those spiders. Spider monthly. Since we got a couple minutes. Well, you'll just have to ignore the last two bars. We know this is still up. Spider monthly. I mean, the only major reversal pattern is close below October 22. You see here, broke above through July, pulled back to a rotation zone into October, got a monthly %B buy up, and now it's retesting the highs. If the spiders break out based off the monthly, the key monthly targets from the last reverse harmonics would be 496.46 and 512.95. Other than that, let me just pull this off so we can see what's going on. Right now, we're roughly in doji mode. We'll have to see how this month ends up because, we'll have to see. Because then if it closes below this month, if this month stays strong at this point, then you get a close below this month, it could easily be a return first to the rotation zone on the monthly. So that's what I'd be watching. Other than that, there's not much to talk about. Technical damage doesn't even start until below 457 in the short term and doesn't get bad until below 415 based off the monthlies. All right. So that's where we sit. Thank you, everyone, for tuning in. Hope that helps. Again, if you need to get a hold of me, I'll check Discord. I know Legion Reaver's been talking to stuff about doing some outline. I think he reached out to you, Stu Sterling. If you need to get into Discord, send me an email at support at Path Trading Partners, and I'll talk to everyone later. Bye for now.